Investors and traders, welcome to the channel. Market chart pattern today is 3rd of April 2025. Hope everyone is having a good day health-wise. Markets have been pretty tough, so we'll talk about this today. As always, this video is for educational purposes only. It's not a financial advice. Okay, so what we are looking at is our timing model for the Dow Jones Industrial Cash Index, and it's a weekly chart, and we had a key timing coming in on 31st of March 2025. Because the weekly chart, we give it two weeks on either side. We had the on Monday the timing come in, and we have seen pretty significant moves in the stock market, stock indices. We were kind of expecting that because of the pattern formation as well. So we'll actually take a look at this a little bit later on in the video. But just want to go through some of the statistics as well. So I've got some reports here. So this is a report coming out of my system. And we'll just quickly go through that. And if you're interested in getting these reports, I'm distributing to some of the subscribers who have asked for it. You can actually go to the description, get the email it to me, and I will add you to the distribution list. It's free of cost while I'm building the system, and you will be grandfathered in. So if you want these reports, and I'll be building further reports as well for other asset classes as well, please do email me and you'll be added to the distribution list. So let's take a look at some of the key indices that we are following here. These are the daily returns, and we can clearly see that the NASDAQ was down over 5%, S&P 500 down. These are the cash indices, minus 4.84%. Dow Jones about 4%. This is the French CAC 40 index. It was down 3.3%. German DAX down 3%. This is the Nikkei Japanese index down about 2.7%. FTSE 100 down by minus 1.5%, 1.5% approximately. And this is the Hang Seng index down about 1.5% as well. So this is what happened in Asia. This is Japan and Hong Kong. This is what happened in Europe. So all across United States, Asia and Europe, we see the equity indices being under pressure. And what is moving up is the volatility. So VXN, this is the volatility index for the NASDAQ 100. I was up nearly 30% today, and nearly 40% was the VIX. And then on the weekly basis, this is how the distribution is. Nikkei actually is being the weakest performer, and out of the equity indices, the FTSE 100 seems to be doing better, but still negative for the week. And you can see how the volatility has spiked up. These are months to date, but the month has pretty much started, so we can have a look at the year to date. We can see that Nikkei is down about 13%, and the 11.85% is NASDAQ 100. And look how the volatility indices have done. And something which is quite interesting is, while the market has been down, especially in the United States, but not all the stocks were down. So this is something really, really interesting that I like to take a look at. It gives me an idea of, okay, when the overall market is under pressure, what kind of stocks are actually doing better and actually outperforming the index or the benchmark, and by how much. So S&P 500 was down about minus 4.84% today, which is pretty significant. But you can see that these are some of the stocks which actually performed much better, and they outperformed the benchmark index. So we can take a look at Lamb Weston in the packaged foods and meats sector. It was up 10% and outperformed the S&P by 14.85%. Molina Healthcare, so managed healthcare, this was up as well. And then we have the Centene Corporation. It's again, you can see in the healthcare sector, it was up 5.86. And then managed healthcare sector again, Elevance Health. And then you can see three of these performing stocks. They are in the healthcare sector. And then we had the SBA Communications in the telecom, Kroger food retail, very very interesting. First Solar, I don't know this company, but the sector is coming under semiconductors, which is quite interesting to see because some of the chip stocks they actually sold off quite a bit. And then we have the AMT, we have the Dollar General. It has actually been doing quite well for quite some time, and this is the American Water Works, water utilities. So you can see, although some of the well-known Magnificent Seven stocks, which had been really, really good performers over the course of several years, they're not making the list. They have been actually under a fair amount of pressure. But some of these stocks, which we, not necessarily even hear about because they're not in the news that much, but they have performed quite well. So quite really interesting is to see the healthcare sector. These are the week-to-date returns, and we can see that some of these stocks which appeared up as well, they are part of it. But we also see really interesting again is the Centene Corporation. I think this is one stock we'll take a look at later on as well. Again in the healthcare sector, so this is one sector we should begin to pay attention to. And then the McKesson Corporation is healthcare distributors as well. And then we have the Universal Health Services (UHS), which is in the healthcare facilities sector. So you can see there is some sort of a theme which is appearing. Rollins Environmental and Facility Services, really interesting. Healthcare distributor again. This is the one Cencora. Really interesting stock. We'll take a look at this later on as well. And then the month has just begun, so I think we can quickly walk over towards the year-to-date returns. And here's it's pretty interesting that CVS actually has done pretty well. This is tobacco stock. Philip Morris done really well since the beginning of the year. And then also there's another stock which is not making the list, but also in the tobacco side, was Altria. That one has also done pretty good. Gold, of course, Newmont Mining done quite well. And you can see that some of these stocks we have seen in the charts up as well. So if you're interested in getting this data, it's being published for free. Of course, it's not of any sort of financial advice. I can add you to the distribution list. All you have to do is go to the description, take the email, just email me, and I will add you. And I send these out every night actually. So let's now take a look at our how the markets did today. So we'll start by taking a look at the dollar index, and dollar, as we know, that has been under pressure. This is the weekly chart, and you can see that after hitting exactly our resistance zone, the market has come back and pretty much testing the bottom of this range. And where it is right now is it's quite interesting because this is where we could see some support come in, where actually it hit this level already. So that's going to be quite interesting over the course of, well, we have only got Friday left now in the week. What this market is going to do, you can see that it's just come right towards the bottom of this range. A pretty big decline in the dollar index and some of the other currencies. If you look at such as the euro dollar, euro USD, you can see the big moves in these currencies. And then it's going for the top of this range. It's not exactly a mirror image of the dollar index. It's about 53%, 52-53% composition of the dollar index is actually the euro currency, but they are fairly identical. So just want to point out this weekly chart. Oh, of course, the week is not over yet, but just wanted to point out this zone, which the long-time subscribers will know, which we had actually plotted out way in advance, and I was pointing out the market is actually hitting major support levels, and this is where the zone is. And at that time I did receive some negative comments, which is they're all welcome on the channel, but just wanted to point out that after that we have seen a pretty significant move to the upside. So that support level was held, and we have seen nearly a 10% move in the currency, which is a lot in the currency market, because these are $8 trillion. It's an $8 trillion market. $8 trillion traded on a daily basis, and Euro USD is the most widely traded currency pair. British pound, Japanese yen is the second one, and the British pound is the third one. And then we have I believe the Canadian dollar, the loonie, and then we have the Australian dollar. But these three major indices, they are they make the bulk of it. And then similarly, if we take a look at the British pound, here we go. This was the major support that we were pointing out around 122.60. The market, of course, went below that, but it was quite quickly snapped back up. And that was the thing. So it was kind of a false move to the downside, and we have seen a really nice move up in the British pound as well, which has been about 9.15%, so nearly 10%, just like the euro. And this is what it looks like on the daily chart. It looks like it wants to continue a little bit further as well. And then on the flip side, let's take a look at what is happening with Japanese yen, and we can see that Japanese yen found pretty strong resistance from this zone, which is 38.2% retracement, and then it's likely to move down a little bit further into this region. So this is what we're looking at in the currencies. Really interesting price action taking place in the interest rate market. So let's take a look at the 2-year yield, and this is what we had been watching. So let's actually, for the new subscribers, let's take a look at how we have covered this market historically. So when the market was here last year, we were pointing out that this market could actually go all the way down to 3.9%, and this is what we actually saw. So this is written, from last year here. Long-time subscribers will know. At that time, we were close to 5%, but the pattern was actually predicting that we could go as low as 3.9%, and we did. And then after that, we had a really nice rally, which rally is actually pretty much equal to what we had seen before. Here we go. So this is the market symmetry concept. So it was the bearish symmetry, it remained intact, and then it went right into here for quite a while. It just stayed right here, and then it broke down, and then when it broke this 38.2% retracement as support around 4.07%, that's when we began to look at a possible pattern formation of this ABCD in green. And once it stalled around the 38.2% retracement, which is exactly equal to the previous move it had in this down leg, again the market symmetry concept, this market was not able to sustain higher yields and it's moving lower. So looks like it wants to go down to about 3.55%, which is going to be the bottom right here, find some structural support. But what the possibility that we are looking at is that in fact the chances are we are in this blue ABCD to the downside. We could see the yields on the 2-year treasury note fall to as much as 3%. And this is on the shorter end of the curve, so it looks like yields are on their move to the downside. In my opinion, the Fed really closely follow the 2-year treasury note yield for their decisions, for making the decision to cut the interest rates. So it does look like, although they are saying 2 interest rate cuts baked in for this year, for 2025, but by the looks of it, what the pattern is forecasting, it also depends what kind of speed we get for the yields to move lower. We might actually get 3, maybe even 4 cuts. So it looks like more than 2 cuts are coming in 2025 from Federal Reserve, which I think the Fed might actually get forced to do this as well, just to prop up what's happening in the stock indices as well. So that's just my opinion, of course. But what the chart is telling us, 3.55% on a break below of this structural support. This is where we could see some sort of a bounce. We could eventually be looking at 3%. That's going to 2.95% to be precise. Okay, so let's take a look at TNX. This is a 10-year treasury note, and here it's fallen right to the 61.8% retracement, and now it had a bit of I would have really liked to see a pretty negative close for the yields, but they backed up a little bit. So I think it's in this zone where we can see some sort of consolidation take place. That sort of possibility is there. So that's going to be pretty interesting. I'm removing this because this is no longer going to play out, this one. So right into the 61.8% retracement around here, also because of the structural support right here. here we go. This is the region around 4%, and the yields could stabilize a little bit. And if they rally from here a little bit, then I don't think they will rally beyond this. That will be the market symmetry concept. So that will be quite interesting to see. Here we go, something like this. On the 10-year treasury note, I think we can see some sort of consolidation here. Yields move up a little bit, but not to an extraordinary extent. And then if we take a look at this, but on the futures, this is the 10-year treasury futures. Here we had a big target around 112.18. Reached that. I think we probably are aiming for 113 right here. In terms of the retracement, let me actually get. I'm gonna remove some of this to make the chart more clear. Oops, I did not want to remove that. Let me remove that. And okay. Yeah, so we have gone above the 61.8% retracement. I think, yeah, as I mentioned, we are in this ballpark figure. We can see some consolidation around here. 113 looks like the market wants to make an attempt towards it. Okay, so this is what we are taking a look at in terms of the 10-year treasury notes and their yields in the futures. Let's take a look at the long bond futures. This is the 30-year long bond futures daily chart. We can see that this is what we were talking about the other day. That's this ABCD formation. It did that. Also the market symmetry. This was the biggest decline, and the market actually declined by about the same amount. Went a little bit lower intraday, but not closed below it, and then boom, a really powerful move to the upside. So this is the concept of market symmetry. Markets like to repeat again and again, and this whole thing is moving in a very organized rhythm, which is really good to see. So looks like the market might be heading towards this zone 121 over there, but of course we have some structural resistance coming here as well. So in this zone about 120 120 to 121 roughly is where we can find some consolidation or resistance to come in for the long bond futures. Gold. So the gold is really interesting, really interesting. Look what happened to the gold market. So the gold has been in a fantastic uptrend, right? But it's also the case that this is some research that I did. There is something to do with Basel III, which allowed the banks to look at gold in terms of an asset on the balance sheet in a different way. I don't know too much of the details. That came in last year, so we saw a nice trend in gold as some institutions started to buy. And then one of the other things has been that there was some aspects with regards to tariff, that tariffs could come for the gold as well. And then one of the things is that in London we have the London Metal Exchange, and it's a physical market, so physical gold is traded, whereas a lot of paper is traded in New York, for example. But based on some research I had done, a lot of players have actually been taking delivery against the paper contracts, and then a lot of physical gold had actually been moving, and that was perhaps some of it was in anticipation of tariffs coming in, and maybe the gold might come under the tariffs as well. I don't know whether it did or did not, but I know that goods coming out of UK and being imported in the US, there is a 10% tariff which was announced. So with that news out, we saw a pretty big move in gold. Let's see how big of a move this was. Yeah, so it had about a 3.86% move, which is one of the bigger moves that we have seen in one day. And of course, it just retraced a lot of it back up. But the interesting thing was I was watching the futures market, and I was also watching the spot market last night after the news of tariffs came out, and when the market futures opened after a brief rest they have. the futures market, it was making a retracement, whereas the spot market was taking out the high. So there is a little bit of disconnect between the two markets, and it's really interesting to watch. So the key point is that I want to illustrate is that I think we should pay really close attention to this region, and the reason I'm saying this is because if we take a look at our really long-term monthly charts, here we go. This is the region that I was pointing out where we could see gold trade into, and then also find pretty good resistance just because of the number of these confluence of Fibonacci expansions and pattern formations coming together. So it's getting into this zone. I do have a further higher target around 3640. That's because of this box channel right here. This box method. So it's basically a it's not a one-to-one projection, but it is you draw this box of this entire range, and if the range is to expand 100%, this is the target we get. But I think this zone is also really important, so maybe we get up to 3300, but it's also possible that where we are right now, we begin to see actually gold consolidate and maybe pull back from here as well. So pretty significant levels gold has reached, and it could be pretty significant resistance level as well. So on the shorter daily chart frames, we will time frames, will just keep on watching gold very carefully. It's also one of the things that if there are leverage positions in the market, and if they need the cash they to put up for margins, for example, and then the players are just gonna sell whatever assets they have to, accommodate some of their business operations, for example. So this is the thing about the gold here. Now, let's have a really quick look at the equity markets. Probably not gonna go into too much details of this, just because of conscious of the time. It's nearly 22 minutes. Here we go. So we were watching for this pattern. What we had discussed was that if the market was really bearish, it's not going to go much beyond this shaded region that we are drawn, and exactly that what happens. So I'm going to remove this part, and then we are seeing this move. Looks like we are in this orange ABCD pattern to the downside, and the 5th of August 2024 lows looks like they are into the focus. This is where the ABCD is being pointed out as well, and then we have got 78.6% retracement coming around 53.35. So it looks like that's gonna get hit first, and then we might find some sort of support perhaps from there. But the ABCD does point towards this kind of a double bottom kind of a formation. So this is what we are looking at in the S&P 500. Once it hit this level and wasn't able to move beyond it, we knew that we have got further downside coming at us, and that is what we saw today. But what I'm also looking at is, let me change the color of this thing to blue, is a smaller ABCD right here, and that one completes where the market closed. This is the cash market, of course. So between here and the 78.6% retracement, just because this move is with a gap and this strong, the chances are that it is this move is actually going to extend. And if it extend, then what we are going to do is we are going to take 1.272, also 1.618. So 1.272 comes really close to 78.6% retracement. So around 53.15, 53.35 is the region as some sort of first support, but looks like it wants to go a little bit further, maybe test to these 5th of August 2024 lows. That might be the case as well. So let's take a look at what is happening with the NASDAQ 100. This is the cash market for NASDAQ 100. Oops, let me actually put it back. So same story. We are drawn this box, and we said if the market is really bearish, I'm gonna go beyond this. And then it touched this boundary of it, and boom, it's coming lower. I also see an ABCD here, a smaller one. Here we go. Here, so it's got a little bit further to go to the downside. The bigger one is this one, where the question mark is, and we have got pretty good support around this region. Let me actually draw these zones. So it looks like we might be heading towards this region of 17,700 to 17,200, where we are likely to find pretty good support. Again, it will be testing the 5th of August lows. So yeah, maybe the market gets there. And the interesting thing is tomorrow is Friday, so we'll have the weekend coming up. So that actually presents an interesting situation as well, because developments can take place over the weekend. Now let's take a very quick look at the Dow Jones. Dow Jones has been one of the indices which has been a little bit stronger compared to the other ones. Look at this holding this low, but looks like it's going for 40,300. Russell 2000 has been one of the hardest hit ones, and look, it's already going, it's gone beyond the 5th of August lows. Now it's going for this kind of a double bottom formation of testing the January 2024 low. So pretty interesting what is happening there. NYA, which is the New York Stock Exchange Composite Index, looks such a big decline of 3.92% in this one, and I think it wants to continue a little bit lower as well. So this is what we are watching in the major markets and the stock indices. Let's take a really quick look at some of the key stocks that we like to follow. And let's say Tesla. So the Tesla is kind of hanging in there, consolidation, one of the better performers in the kind of Magnificent Seven stocks. Apple was hit pretty hard today. Here we go. I think we are looking at about 198, where we're gonna have a pretty good support. So it's getting into that key support region around where it is trading towards around 200 to 198 level. And then Meta, looks like Meta wants to continue a little bit lower, although I have this as a region of interest. But with this kind of a gap and move lower, maybe it wants to complete this ABCD around 490 to 470 level. That's going to be pretty interesting. And then let's take a look at some of the stocks that we were talking about, from which have actually outperformed the S&P 500 today. So this is Cencora. This is one of the stocks which is from the healthcare. It's a healthcare distributor. In that sector, look how strong the stock is. Totally opposite of what we saw even in Apple and Meta stocks. Really going well. Performed extremely well since 2020, beginning of 2025. I think it's up like nearly 30%, so performing really well. And if we take a look at this tobacco stock, the Philip Morris International, you can see that very different kind of a picture that we see. In fact, this stock is up now at the close nearly 35%. So you see how the market is. It's really rotating into these defensive kind of names. And then another one we can take a look at is of course the CVS. I think it's more to do with its merger, so it's event related, but we can see this one. And then if we take a look at the other stock, such as T-Mobile, which is quite interesting. You can see what the trend is doing. I think it pays dividend as well. So this is just wanted to show you that how the market is rotating. McDonald's, which is one of the defensive names, especially did quite well during the financial crisis. It does appear it is actually in this black ABCD and likely to make I believe that was a new all-time high that it had made earlier on in March, so it's likely to actually go and challenge that, maybe make a new all-time high. So oops, what happened to my I got it back. So you can see that this is how the market is rotating. McDonald's pays a really good dividend of $1.77. So putting some money into McDonald's, you are going to get some decent dividend out of it. Pretty good, not a decent, but pretty good dividend out of it. So this is what we are watching. My apologies, the video has become quite long, but again, really important stuff happened in the market. So I just want you to cover as much as I can. and I really appreciate it for you guys if you have watched this entire video till now. Really appreciate that. And if you happen to like the video, you learned something from it, you like our technical analysis, please do subscribe to the channel and also give a thumbs up to the video. And if you're interested in getting the reports that I showed you, I also do the CSV versions as well. That's free of charge. While I'm building it out, please email me. The email is available in the description, and I will add you to the distribution list. And if you want to donate something to the channel, there is a link available in the description as well. I will highly appreciate that, because it will just help me to cover some of the costs related to the channel with regards to subscriptions, etc. for TradingView, for example. So thank you very much for watching the video once again. Good luck, good trading, and speak to you guys soon.